So I've been getting a lot of questions about how to invest in the AI revolution because recently there's been a lot of interest, a lot of excitement around ChatGPT, which has been dubbed the Google killer. And a lot of people have been amazed about what can be achieved with AI. But what a lot of people don't realize is that investments in AI and AI technology has been around for quite a while, and a lot of progress has been made, in fact, in the last 5 years. It's just that the companies that have been involved in a lot of these AI technologies have been keeping their products under wrap, have been secretly developing all their AI technologies and not wanting to reveal it to people too soon. But because of ChatGPT launching in November last year and wowing everyone and saying, oh my God, AI is so amazing, so fantastic, and again dubbing ChatGPT by OpenAI this Google killer, now these companies like Alphabet and Meta and Amazon, for example, they've been working on AI for many, many years, have no choice but to now unleash their products. What they've had all along, they've been keeping really secret. Alphabet has been spending close to $30 billion a year on their R&D, which again, a lot of it goes into their AI. A lot of people forget about that. In fact, last year, if you recall, a Google engineer came forward and said that their AI chatbot, which is based on Lambda, was so powerful and so real that he believed that it came to life. It became sentient, that it had feelings, it had a personality, was afraid of being turned off, and he was coming out to expose Google for creating these sentient AI chatbots, kind of like a Skynet in the Terminator. And what happened? Google fired him. And a lot of people forgot about that. Look at Meta. Meta spends like about $35 to $38 billion a year on R&D. And many people mistakenly think that a lot of that spending goes to the metaverse. And if you've watched my previous videos, you know that that's not true. In fact, 80% of Meta's R&D is not to the metaverse. It's to AI. They've been investing billions and billions of dollars in AI for the last 3 years, especially their AI discovery engine. So these are some articles, if you read, on what Meta has been doing on AI, but people ignored it, people forgot it, until now when ChatGPT comes out, people go, wow, AI is amazing. No, Meta, Alphabet have been working on this for years. So for example, last year in September, there was this article that said, Meta is working on ways to read minds using AI, right? Meta banks on AI to boost growth prospects. Meta AI unveils a new artificial intelligence method for text-to-image generation using open vocabulary scene control. In other words, Meta is developed this kind of software, AI software, where using text, you can say, draw me a certain picture, and it will generate pictures and videos just based on text. So it's been around for a while, and again, these companies like Meta and Alphabet are actually far ahead of OpenAI and ChatGPT, but they've not revealed their cards yet. But right now, they're starting to reveal their cards because they realize that there's this AI war going on, and they got to get into play. So again, Meta, look at their capital expenditures. They're spending $30 to $35 billion a year on R&D. And again, 80% of that is not the metaverse, it's in AI, it's in artificial intelligence. So you guys, I'm sure most of you by now would have heard of ChatGPT that was launched in November last year. And within like 2 months, it's got like over 1 million subscribers over in the world. And I spent a couple of hours a day playing with it, and yeah, I was actually very, very amazed. In fact, one of my colleagues in office, he wrote this and he showed it to me. I was like, wow, my God. So he just went to ChatGPT and he typed in, write a poem about Adam Khoo and the stock market. That's it. It didn't give any background about who is Adam Khoo and what Adam does and what I do, right? And it came out with this poem, right? Adam Khoo, a man with vision, a master of finance with a mission. He teaches the art of the stock market, guiding people every step of the market. So how did he know, right? Well, because of the knowledge base, I guess, because of the work I've been doing now I've been teaching investing now since 2005, 18 years, right? With his teachings, wealth is made, investors' benefits, profits are displayed. He shows the way to success and fame, making people the owners of their financial game. Wow, and all this was created in less than 5 seconds. That is the power of artificial intelligence. The stock market is a place of opportunities untold, but it's not easy to strike gold. Adam Khoo, with his expertise, shows the way to make money with ease. Blah, 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 right? So yeah, I was blown away by ChatGPT, and I used it a lot to write poems to my wife. My kids are now using ChatGPT to kind of like, help with their homework, stuff like that. But of course, it does have its limitations. And one of the limitations is that ChatGPT does have a bit of a bias built into it. So for example, if you type, write me a poem about the positive attributes of Donald Trump, it will say that it can't do it. It says that it won't comment on some political stuff, right? But if you say, write me a poem about Joe Biden and his positive attributes, it writes a beautiful poem. So it's got this bias built into it. At the same time, I was a bit naughty and I typed to ChatGPT, I said, name me the top 10 porn stars in the world today. It said, oh, that's inappropriate, right? But of course, if you go to Google and you type that, whoa, you got all the videos, right? And I went to ChatGPT, I typed, tell me a dirty joke. And again, the reply was, I can't do that. So it's got a lot of limitation, a lot of biases, where you go to Google, tell me a dirty joke, whoa, it tells you lots of dirty jokes, right? So it does have its limitations. Another limitation of ChatGPT is that the information or the knowledge base is not real time. It's based on what it's been trained on till 2021. So if you ask it anything real time, it can't answer. So for example, when I typed the question, what is Tesla's market share, it was not able to answer because it doesn't have real-time information. So it does have some limitations. But of course, moving forward, you can bet it's going to keep improving and improving and improving. And again, people are saying that this is going to kill Google. I don't think so, because Google's chatbot, which it's going to unleash really soon, what people don't realize is light years ahead of ChatGPT. It's just that Google, again, has been keeping it secret for many, many years, but now they have no choice but to show their cards, right? So what has happened since ChatGPT was announced was launched in November last year? Now we know that Microsoft has actually been seeding OpenAI, which owns ChatGPT. So Microsoft invested $1 billion into OpenAI, and they are now investing another $10 billion, and more on that later on. So Microsoft basically is now the owner of ChatGPT, which they are now beginning to infuse into their search engine, Microsoft Bing. And they believe that by doing that, they could take market share away from Google, which of course is possible because Google has got 80% market share or 90% market share. So if Microsoft Bing can just get some increase in market share, that will definitely take away market share from Google, right? Doesn't mean that Google's a bad investment. I think Google still has huge potential and growth moving forward. Now, having said that, I also invest in Microsoft. In fact, I've got an equal investment allocation to both Microsoft and Alphabet. So whoever wins, I win, right? So, place your bets on both horses because, well, I think at the end of the day, they're both going to win in their own niche. Okay. And sure enough, what happened? In less than 3 months, Google has now announced that they will roll out their AI chatbot in response to ChatGPT. So Google has named their chatbot Bard. And Bard is based on their Lambda AI, which is supposed to be sentient. And what's really powerful about this is that it's plugged into Google Search real time. So looking forward to that. They've now kind of like beta launched it to a small test group, but they'll be launching it to the public in the next couple of weeks. So I really look forward to that, and that will really bring the world of search and of course AI to the next level. So we're looking forward to that. So what's important to understand is that if you think about it, in every industry right now, the auto industry, the finance industry, the retail industry, every industry is being disrupted by artificial intelligence, automation, and robotics. So companies that are not investing in AI products, whether machine learning, robotics, generative AI, virtual assistants, if they don't invest right now or have not been investing for the last many, many years, they are at the risk of being obsolete. So just as AI is going to replace a lot of jobs and make lots of jobs obsolete, AI is also going to make a lot of businesses, a lot of stocks in the market obsolete as well. So I looked through all the stocks in my portfolio and I was happy to realized that most of the stocks I own are heavily invested into artificial intelligence, spending again, billions of dollars every year on AI. And I think about it, like this poem I just showed you, ChatGPT wrote this in a couple of seconds. So think about it. With this being unleashed, who will need a poet? Who will need a songwriter? I mean, poets and songwriters may become a thing of the past because they're all going to be replaced by AI that can write poems, that can write songs, they can write essays, they can write programming code in seconds. I mean, programmers could be a thing of the past. I mean, it's pretty scary, but it's something that we have to embrace. We have to learn how to invest in so that we benefit from this huge AI revolution. So how big is the AI market? So the global artificial intelligence market is estimated at $119 billion in 2022, and it's expected to hit 1.5 trillion by 2030 with a registered compounded annual growth rate, or CAGR, of 38% for the next 7 years. A 38% annual growth rate for the next 7 years. So it's a huge growth industry to be invested in. So what kind of companies can we invest in that are involved in AI? Basically, there are two types of companies. First would be companies that use AI to make their existing operations more powerful. Like, again, examples I gave you, Alphabet or Meta or Amazon, and we'll go into more detail in a while. Second would be companies that profit directly from AI by selling hardware, software, or services that AI technology needs. So what are the best artificial intelligence stocks to invest in to profit from this AI revolution? Who better to ask than ChatGPT? So here's my question. What are the best AI stocks to invest in? So here's the response. As an AI model, I don't have personal opinions or biases. Yeah, right, that's a lie itself. But here are some of the companies in the AI industry that are popular among investors. So number one, NVIDIA, a leader in GPU graphics processing chips, which is used for AI and data science applications. Number two, Alphabet, which is actually their competitor, which is heavily invested in AI. Number three, Microsoft, their daddy that just bought them. Gotta mention Microsoft, of course. Amazon, the e-commerce giant, is heavily invested in AI. And number five, Baidu, which is the Chinese search engine that has now integrated their own version of AI chatbot into their search as well. So that's one reason why many of these companies recently, the stock prices have been rallying, especially Baidu, because of this new hype around AI. But of course, in the long run, it's not a hype. In the long run, there's massive growth potential for companies that are heavily invested into AI. So again, are there only 5 companies? Of course not. So that again is the limitation of ChatGPT. So I had to go to Google and do my research and find out, okay, what are all the companies involved in AI, and to read up more about specifically how much they're spending and how they are using AI in their operations, or how they are contributing to the growth of the AI industry. So there are quite a number of companies involved in AI. These are the top ones which I have decided to focus on. So number one on the list would obviously be Microsoft, Mr. Softy. And in full disclosure, I've got a position of Microsoft in my portfolio. I've been having that for quite a number of years. So Microsoft, like I said, is expected to invest an additional $10 billion into OpenAI, which owns ChatGPT. And Microsoft will receive 75% of OpenAI's profits until it makes back its $11 billion investment, 1 billion plus 10. After which it will have a 49% stake in OpenAI. Microsoft has also, as of yesterday, I believe, launched an AI version of its Bing search engine powered by ChatGPT, and is incorporating a lot of the AI technology into all their Microsoft apps. So for example, think about it. They're going to infuse AI ChatGPT into Microsoft Word, Microsoft Excel, Microsoft PowerPoint, Microsoft Teams, and Azure. Now, think about how crazy that could be. So imagine you are writing a book on Microsoft Word, and instead you use the AI function and say, okay, write me a chapter on how to save wisely. If you're writing a finance book, and it just writes the entire article for you. Or again, write me a poem about my wife, and it just writes a poem for you. Imagine you're on Microsoft Excel and you say, create for me a table showing me the comparative market share of all the different auto companies in the world. And I mean, in the past, you had to type in all the numbers, but now because it is linked to the AI, it can pull the data from the web and create this entire chart for you. It's amazing. Or imagine if they infuse it into Microsoft PowerPoint. When you're doing PowerPoint presentations, instead of beautifying the PowerPoint, putting in images and designing, you just ask the AI to develop a design for you based on your criteria. It sounds mind-blowing, but it's coming really, really soon. So I'm really excited about my investment in Microsoft. Next, number 2 on the list would, of course, be Alphabet, which I said is way ahead in the AI game, but now they're being forced to reveal what they truly have up their sleeve. So Alphabet uses AI and automation in every facet of their business, from ad pricing to content promotion to knowing what to filter off in Gmail. And Alphabet is the parent company of DeepMind, which is their AI software subsidiary that created Lambda and now Bard, their AI chat function. So again, they are rolling out their AI-powered chatbot, Bard, that will pull information from the web and can provide fresh and high-quality responses compared to ChatGPT. So that should be launching in a couple of weeks, and I'm really excited again for this investment into Alphabet. Now, bear in mind, before you invest in a stock, you have to do your research about that business. You have to put it through the investment criteria. And again, I'll run through this very quickly in a while, but never invest in a stock just because it's involved in something like, oh, this is an electric vehicle company, EV is the future, I'm going to invest in it. Or this is an AI stock, I'm going to invest in it. No, you have to look at the financial statements. Is it increasing its revenue? Is it increasing its free cash flow? Is the stock undervalued? You have to go through the process of ensuring that it's a fundamentally good business that's selling at a discount before you purchase the shares. So I'll run through that really quickly in a while, but I'd just like to show you what are the different companies involved in AI in the first place. Right, number 3 on the list would be NVIDIA. You have to talk about NVIDIA. So NVIDIA, as you guys know, they make the highest end GPU chips, which are the graphics processing unit semiconductor chips for AI applications ranging from autonomous vehicles to robots to data centers. So NVIDIA makes the chips necessary for the massive processing power that's required to run advanced AI applications. So many of these companies that run AI, like Meta, for example, they have to use chips from NVIDIA. So Meta, for example, spends billions of dollars buying semiconductor chips from NVIDIA to run their entire AI discovery engine and their data centers. To give you an idea, just ChatGPT's growth could result in sales revenue of $3 to $11 billion a year for NVIDIA. And NVIDIA has an automotive segment where they make chips for self-driving cars. And currently, it's a very small part of their business. It only contributes 3% of their revenue, but it's a segment that has huge growth potential. So currently, in financial year 2023, NVIDIA's automotive segment is projected to generate $900 million in revenue. So that's a 45% growth year on year. Now, the company recently has won $11 billion worth of design businesses from the automotive industries. From which customers? Mercedes-Benz, Hyundai, Tata Motors, Jaguar, Land Rover, Volvo, BYD, Lotus. Of course, not Tesla, because Tesla makes their own chips. So NVIDIA is providing chips to all of Tesla's competitors, especially the Chinese auto manufacturers. So this $11 billion, again, is the tip of the iceberg. NVIDIA projects that their sales from the automotive industry, self-driving EVs, would hit $300 billion in revenue in the next couple of years. So again, huge growth potential for NVIDIA. Again, in full disclosure, I've got a investment position in NVIDIA as well. Number 4 on the list would be Amazon. Now, Amazon is, I would say, the company that has integrated AI into every aspect of their business, every single business segment, including how to use AI to target advertisements, how to use AI for their e-commerce search algorithms on what to recommend to you when you visit Amazon, the products they recommend to you, the ranking. Alexa, which is Amazon's virtual assistant, which is already installed in many US households, that listens to all your conversations and knows what you want. And Amazon has also a wide range of AI services to its AWS cloud customers, its enterprise customers, including advanced text analytics, automated code reviews, and chatbots, which they've integrated into their AWS solutions. Amazon Logistics as well has benefited a lot from AI and robotics, and it's just the beginning. Currently, AI is helping Amazon with scheduling, rerouting, and soon to be drone delivery, where they're going to deliver packages same day, maybe same hour in the future using drone technology. And this was an interesting chart which I got from ARK Invest, although I don't invest in ARK Invest, but I thought it was pretty interesting, right? As you know, Amazon has been growing its employees. It overhired in the pandemic, so now they're laying off workers. But if you look at the growth of their employees versus the growth of robots in their warehouses and factories, they are growing their robots at a much faster pace than their employees. So if you project this into the future, don't be surprised that in a couple of years, Amazon is going to employ more robots than physical human beings. Now, will that be good for the stock? You bet, because that would really lower their manpower costs, increase their margins. Now, so far, if you take a look at the other companies, Alphabet, Nvidia, and Microsoft, their revenue has been growing, their profits have been growing. But for Amazon, their profits have been falling for the last couple of quarters. And that's why now in the short term, the stock price is going down. And people have been asking me, Adam, are you concerned about that? No, I'm not, because Amazon's revenue is still growing very significantly even during this cyclical slowdown. The only reason their profit dropped in the last few quarters is number one, because they again increased their capacity, their warehouses, their fulfillment centers too much during the pandemic. And then when there's a cyclical slowdown in spending, that increased their cost a lot in the short term. Number two, they spent a lot on R&D, again, to build these warehouses. Number three, inflation has increased their manpower costs and their fuel costs in the short term. So all these are short-term issues. Once inflation comes down, which it is right now, fuel cost comes down, manpower cost comes down, they start to near the end of their investment cycle, and demand starts to pick up again, you'll notice that Amazon's margins will expand, and that's when the stock will begin to rebound very, very strongly. So it'll probably happen second half of the year or next year. So short-term underperformance of Amazon is not at all a concern. In fact, if the share price comes down a bit more, I'm going to add more shares of Amazon because I'm very bullish on the long-term profits and returns of Amazon. Number 5 on the list, you can't ignore IBM. IBM has been investing in AI for many, many years. It's one of the pioneers of AI investment and one of the biggest spenders of AI R&D. So IBM is an integrated provider of hardware, software, and services to primarily large enterprise customers. And they provide AI as solutions in many different parts of the industry. So for example, in healthcare, IBM's AI technology is used to create individualized care plans, accelerate the process of bringing new drugs to market, and to improve quality of care. In the financial services industry, IBM is using AI to help clients with financial regulatory compliance. So IBM has deployed AI to almost every single industry in the market. Now, having said that, I'm not invested in IBM, and I do not intend to invest in IBM. So like I said, just because IBM is a big player in AI doesn't make it a good investment as a business. Because if you go into the fundamentals of the company, they're not doing really well. Their revenue has been falling for many, many years. Their profits have been declining, and it doesn't look like it's a short-term issue. It looks like a structural issue. Their economic mode, their competitive advantage has shrunk, and looks like a negative deteriorating mode trend. Okay, so although IBM again is a leader in AI, it's not something that I would invest in. Again, that's just my own opinion. Now, next we have got Meta. So again, Meta is one of the biggest investors into AI, $35 billion a year, second only to Alphabet. No, in fact, it's about the same. In fact, Alphabet spends 12% of their revenue on R&D. Meta is spending 20% of their revenue on R&D. So in terms of percentage of revenue, Meta is the biggest investor of AI technologies in the world in terms of percentage of revenue. And Meta has been one of the best performing technology stocks this year so far, up 56% stock price this year. Their recent results announcement really prove a lot of people wrong, because people are saying that they're losing market share, their users are declining, they're losing users to TikTok. No, take a look on every metrics. Even Facebook itself, the Blue app, has been increasing in terms of daily active users. Facebook daily active users for the last 2 quarters increasing 16%, 17%, re-accelerating the growth. In terms of their family of apps, you look at Facebook, Instagram, WhatsApp, and Messenger, you can see the growth as well. Up 34%, up 13% for the last 2 quarters. So users are increasing, they are gaining market share, engagement is increasing, and more importantly, their free cash flow has re-accelerated in the last quarter after declining for the previous 2 quarters. So everything looking good on Meta. I really took advantage of the sell-off last year to add more shares of Meta to my portfolio to reduce my average cost, and as of now, I'm already up on my average cost. You can see my average cost of Meta is about $169. That's because I bought quite a bit before that crash, but I bought more near the bottom, so that averaged my cost. So at today's price of $191, well, at least I'm up on that position. And in fact, I'm up on most of my positions in my portfolio. Number 7 on the list, Palantir, ticker symbol PLTR, a very controversial company. Now, Palantir is an AI-powered data analytics software company. They help organizations accumulate data from many disparate sources, both external and internal to the company, and then processes the big data with algorithms to make data-driven decisions, to help the company to find ways to improve their processes or to find problems to solve. Palantir's biggest customer is the US government. So its Gotham platform is used by the CIA, FBI, ICE, and all branches of the military. In fact, Palantir has been credited for helping to capture Osama bin Laden, finding where he was, and also credited for their intelligence that gave the US government the heads up that Russia was going to invade Ukraine even before they invaded Ukraine. Now, their Foundry platform provides data mining tools for large commercial customers. I do have a small position in Palantir, but it's a pretty speculative company because it's not yet profitable, although they are cash flow positive. Another very similar company to Palantir that is a pure AI-driven play would be C3.ai. This company is similar to Palantir, as in it's a software as a service company whose software allows companies to deploy large AI applications to solve problems and to make their processes a lot more efficient. So their company tools help its customers to accelerate software development and reduce costs and risks across their business units. Now, what's the difference between C3.ai and Palantir? Well, there are 2 main differences. Number 1, Palantir gets big data from information within and outside the organization, all over the place. But C3.ai only gets data from within the organization. The second difference is Palantir, a big part of their business is the government, and another big part would be commercial customers across many different industries. But for C3.ai, they are mainly servicing the energy and industrial sector. So they are more niche in a way. So C3.ai is also not profitable. You can see their revenue has been growing, but again, their profits are still making huge losses, and they are also cash flow negative. Compared to Palantir, although on a GAAP basis, they are still making a loss, but their losses have been reducing and they are already cash flow positive. So between the two companies, I would prefer Palantir. Having said that, again, it's more of a speculative company because they are not generating consistent profits yet. So because of that, I would only invest a very small allocation in my portfolio, which I actually already have. Now, two other AI companies that are lesser known would be Dynatrace, ticker symbol DT, as well as UiPath, ticker symbol PATH. So Dynatrace is a cloud computing infrastructure monitoring and observability company. They have got the Davis AI engine that instantly detects problems in a company's digital ecosystem, identifies what went wrong, and determines potential business impacts for that organization. They were recently named market leader in AI for IT operations by Forrester. So they are a leader within the AI IT operations niche. The second would be UiPath. So they develop robotics process automation technology that allows companies to improve efficiency and reduce costs by automating tedious and repetitive processes. Their AI technology also allows software to perform tasks like reading documents and emails, analyzing language and images, and understanding the content of intent of communication. So these are two other big plays in the AI space. Now, Dynatrace is a profitable company. You can see they turned profitable in the last 2 years. Sales are rising, profits have been profitable, and they are also cash flow positive. And they do have a narrow economic moat. But I've not done a deep valuation or deep research into the company, and I don't own this stock yet, but I could look into it more in the future. But off the top, if you look at certain metrics, like for example, price to sales ratio at 12.66, that's a bit expensive. And of course, the forward PE is 48. Again, you have to do a discounted cash flow valuation to get a more in-depth feel, but off the top, it doesn't look that cheap at today's price. On the other hand, Path looks a bit more speculative because Path, if you study the business model, it doesn't really have a sustainable competitive advantage yet, and it's not yet profitable. You can see that it's still making losses. In fact, losses accelerated in the last year and is still cash flow negative with a price to sales ratio of 8. So although they are heavily involved in AI and robotics, but I would avoid investing in such companies because they don't meet my strict investment criteria. It doesn't have a strong economic moat and it's not cash flow positive yet. All right, so there we are. We've got all these companies that we've run through. We've got Alphabet, Nvidia, we've got Meta, Amazon, Microsoft, IBM, Palantir, C3AI, Dynatrace, and UiPath. And of course, there are many others out there, but I think these are the main ones that you could begin to focus on if you're interested to invest in the AI industry. Hope you enjoyed it, and I'll see you guys in the next video. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.